Hi, this is Daniel, and you're watching Unrivaled Investing. We live in exciting times. There are new IPOs nearly every day, new SPACs, all these revolutionary companies. Can investors make a boatload of money? These are the questions we're asking. And I want to say, hey, what are the questions you should be asking before you look to buy the next hot IPO? And so, that's the purpose of this video. Like, first, what do I normally talk about? Because I normally don't take a high level view like this. Next is IPOs, look at pricing dynamics, IPOs, some of the human aspect. Next, sort of a mention of some of the prior videos I've done, thinking about risk reward and also capital returns, where we are in the cycle. So, first, if you want to understand a little bit, what I like to do is talk about potential multi-baggers, companies that can potentially go up hundreds or even thousands percent. That's what I focus on. So if you like learning about those types of companies, make sure to hit subscribe. If you're already a subscriber, hit that thumbs up button. Also, if you want to know what potential multi-baggers I'm buying for myself, go to unrivaledinvesting.com, click on that journey button, and remember, all it takes is one multi-bagger to potentially change your life journey. So if you're interested in finding those potential multi-baggers and the ones that I'm potentially finding, go to unrivaledinvesting.com, click on journey. Also, by the way, I love it when you loyal YouTube subscribers, you have a question, there's a company that you want me to look at, leave a note. Like, Daniel, hey, I love this video. Can you please take a look at this video and or please take a look at this company and I'll make it happen. There's already a big backlog, but little by little, every day, put in, do another video, and I'm going to get through it. So feel free to leave a comment or a question below. So first of all, with IPOs, like, hey, is this a great opportunity to make a lot of money? Like you see these IPOs, they jump up a lot the first day, and it's like, wow, this is a huge opportunity. But before all of that, you need to ask yourself, like, who's actually making the money on this? Like when you see an IPO jump like 50% the first day, who's making the money on that? And the reality is, it's not the company. The company isn't making that money. They raised funds at the price that they sold to the banker and the banker's friends. And the banker, who's the banker's, top client? It's their friends, their top, AAA clients, as well as themselves, because they're getting a cut of the IPO. And so they're the ones that make the money when the price jumps. So let's say you IPO and you're saying, hey, we're gonna offer the stock at $30. It opens at $50. The people that make the money are from 30 to 50. That's the bankers and the bankers' friends. The company doesn't get a cut of that. The company locked in $30 a share with the banker. Now, in the days prior to it, maybe it got negotiated up from 25, 27, 30. But really, that huge spike day one, that is a flawed system. The system is broken. You're not capturing it. These rich, investment banks and top, investment banking clients, they're the ones that are getting it. It's a broken system because you know who should be getting it? It should be the company. The company should be issuing it directly to you shareholders, and the shareholders should be able to get that right. And that's a whole different process. It's called a direct issuance. And sometimes you do that. Sometimes companies like Palantir at the end of September 2020, they're going to do a direct issuance. And the downside, the reason why companies don't do it is because they want to lock in a price. So like they're like, hey, like we don't know what the market's going to do. Let's lock in $30 a share. But the reality is, like, sometimes things go parabolic and opens up at 50 and then it goes up to 100. But part of the reason why this also happens is because the same investment bankers that are selling this stuff, they also make sure to keep the supply really limited. And it's basic supply and demand, folks. If you keep the supply really limited and you're hyping everybody up with an incredible roadshow and you're like, hey, this is the next best thing, what's going to happen? Limited supply, increased demand, you're going to get crazy prices. So that banker can make sure they can sell their shares that they bought at 30 for a nice profit, and that they make their friends, their friends that are buying at 30 can also lock in a nice profit. So, it's a deeply flawed process. I think it's just broken, in all honesty. Like when you see these companies pop 50, 100%, it is broken, but it also reflects something else that's going on, which is that there's this human dynamic. Like when you see stocks pop that much, they're saying like there's a fear of missing out. Like there's this human bias of there's greed. Like this is pure greed of like, hey, I want to own this next best thing, and I think it's gonna do really well. And like I am pumped to own this. And effectively, it's just greed. You want to capture it. And so when you're about to make that trigger decision of like, hey, I want to buy this really cool IPO because XYZ person is buying it, or because I think it's growing real fast, or it's really special. I want you to think about like, are you that drooling emoji, like, oh, this company's so great and I just need to own some? Or are you thinking rationally about like, what does this company do? What's the risk reward? And that's how you combat this human at the end of the day, it's these animal instincts like, I got to have this. This is so cool. This company's revolutionizing this space. It's so great. Like you gotta suppress the monkey mind and use some cool tricks. And one of these tricks is doing deep dives into the company to actually understand what they do. And you can see, like, that's what I'm trying to do that for you. That's my value proposition to you is I'm giving you a deep dive into some of these companies. Like, what's their business model? How do you think about it? What are they looking like 10 years from now? Do they have this huge upside to make it an attractive return over time? I did a video on Snowflake, Palantir, Unity, um, Sumo Logic, and then I'm also working on the SPACs because SPACs, that's another approach for bringing companies public. It's not perfect. It's less flawed. It's still very flawed. Don't get me wrong. Like, you have this process where effectively you have one gatekeeper, which is whoever's running the SPAC, and they have this pool of money that they raise. And by the way, they usually have this nice cut where they get a payout just like the bankers would in an IPO process, where if they find a deal, then they get these shares for effectively nothing. Maybe they pay $25,000 for shares that could be worth $100 million. I can show you plenty of stories about this happening regularly. Um, so the SPAC founders, they're incentivized to do any deal, even if the deal's crappy, and you get a vote on it based on some PowerPoint that they put together that doesn't have half the detail that a normal filing has. Once again, the system, like outside of a direct issuance, where the company isn't guaranteed an outcome of how much capital they raise, I'd say it's a deeply flawed system where shareholders are potentially getting screwed over. The incentives are all screwed up. You need to ask yourself before you buy any IPO, who is making money from this and why? What are their incentives? And so, I've covered all these different, SPACs. I've got Open Door, which is IPOB. I got Hyliion. I got Desktop Metal. Like, I'm not poo-pooing the companies. Some of these companies are really interesting. But once again, you want to understand what you're buying. You want to understand what they do, what's their potential, and we also need to ask where we are in the cycle, where we are in their price. Like, is this a greedy price? Is this a cheap price? And that's what I also try to do in each of these videos, where I provide you a free calculator for you to play with, like the risk rewards assumptions. Like, it's hypothetical. It's a hypothetical range. You can play around with it yourself. You can make up your own assumptions for what you think this can be, and that is how you defeat the monkey mind, like the monkey brain that's saying like, I gotta buy this. No, like, you gotta beat that monkey brain by saying, hey, I'm gonna use logic, like stone cold logic here on what's my upside downside to figure out, like, is this worth owning? Like, is this what I want to partner with over the next 5 years? Also, you need to ask, where are we broadly? Like, where are we in the cycle? And like, I love this picture where you can see like this obviously this is it reflects where we are in prior years. The guy picks up a phone and he goes, I've got a stock here that could really excel. And then, really excel? Excel? Sell and sell, and then everyone's going crazy. And then one guy goes, this is madness. I can't take anymore. Goodbye. Goodbye, buy, and everyone's going crazy and buying again. And like, that's the cycles we go through. That's human nature. So like, you need to understand where we are in the cycle. And someone actually wrote a great book on this, Edward Chancellor. He helps run a Marathon, which is a major investment firm. The book is called Capital Returns. And the key point is that you need to size up where we are. And when there are a bunch of companies coming public, that means you're adding supply to the supply demand balance. And stocks, just like commodities, just like anything, are driven by supply and demand. Like, so what happens with oil? If oil prices are really high, you can afford to bring on more supply. So with more supply, that's ultimately what happens. to oil is it brings it down. More and more supply comes online. Now there's a lag ultimately. There's always a lag, and that's what gets us. That's what gets the sheeps to the slaughterhouse is the lag because we don't quite get, hey, supply's building. Eventually there's gonna be a hit to prices because you just can't increase supply infinitely without, and keep demand the same without there being a hit to pricing. And that's what happens with commodities, and stock prices at the end of the day are just like any commodity because you increase the supply and you're not really increasing the demand that much. Like what stockholders, if a new IPO comes out, it's not like this new money was invented that's going to move into owning the stock. They have to sell something else to buy it. I mean, that's generally how it works. I mean, yes, wealth is being created, but the more supply you're creating, it's going to weigh ultimately on share prices over time. It's basic supply and demand. The more stock, the more stuff you bring on board. Eventually, people could be like, "Well, why do I need to own these mediocre companies? Because I could just own these great companies." It's supply and demand, folks. Like when you see, you know, prices pop on their IPO, when you see SPACs, and when a deal is announced, the SPAC deal just jumps dramatically. Like, how come some of these SPAC deals, are getting such huge premiums over what the SPAC owners were able to execute? It doesn't make any sense. Like, really, the economics are hundreds of percent better than what the SPAC deal was able to get. That doesn't make any sense. They're literally companies that have negligible revenue with billions of dollars valuation. That's where we are in the cycle. That's the buy, buy, buy. Everything's going to excel. This is great. And then what? You just said excel, sell, 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 sell. And that's the lag that leads the sheep to the slaughterhouse in time. So while I haven't bought any of the stocks I've mentioned here, it's I do reveal what I do own, what I buy, what I hold, what I sell each month, the whole analytical process, my thoughts on my top holdings. If you go to unrivaledinvesting.com, I also have exclusive content just for the folks that, do join, by clicking on Journey. And the reality is, as I mentioned already, just finding one multi-bagger can potentially change your personal life journey. So follow my journey to find my potential multi-baggers. And thank you so much for watching. If this video was helpful or educational for you, please make sure to subscribe, and thank you so much.